This lesson is called Making Accounting Rules. By the end of this lesson, you should be able to explain why accounting rules have to be standardized, explain the comparability and consistency concepts, and explain how GAAP, FASB, and the SEC impact accounting, and know what those letters all stand for. So we've previously talked about why accounting financial statement formats are standardized, but we haven't really talked about the rules that lead to those standardized formats. That's what this lesson is about. So why are accounting rules standardized? Well, because standardized rules lead to standard formats of information. And users need to be able to count on the methods used to arrive at the results in the financial statements as being comparable across companies and consistent over time. If all companies use different rules, the numbers might look the same, but the events and transactions that led to those numbers could be quite different. So, standard sets of accounting rules help regulators, auditors, and all financial statement users determine if companies are preparing financial statements in a way that best reflects the economics of the transactions of the company. Comparability in accounting information is the concept that companies that engage in similar transactions should record those transactions in a similar way. This is achieved by all companies following the same basic set of accounting rules. As we're going to see in this class, quite often a company engages in a transaction and has 2 or 3 options of how to account for the transaction. But they don't have unlimited choices. This small variability, the small variation, helps ensure that different companies' circumstances are reflected in their accounting outcomes. When we have comparability between companies, financial statement differences between the companies are less the result of their accounting rules and more the result of the company's actions. The consistency concept addresses whether a company uses the same rules over a period of time. This idea recognizes that companies do have choices among methods when they do a transaction, but almost all the time, once you start using a certain accounting method, you have to stick with that method so that when you look at financial statements for a company over a period of time, changes for that one company are not simply due to the company adopting different methods. The group of accounting rules that are followed in the United States are called Generally Accepted Accounting Principles. We say GAAP. This is the broad set of rules that cover everything a company does that relates to accounting. The term generally accepted means the methods are accepted by the financial statement regulators and accountants alike. U.S. companies follow U.S. GAAP, but every country has its own version. Some countries' GAAP accounting rules are very similar to the United States, and some are extremely different. You follow the rules according to what the requirements are in the country where your company is located. Under GAAP in the U.S., old accounting rules stay in place forever unless a new rule is issued. In some countries, GAAP is driven by laws and not by accounting rules. In those countries, GAAP changes much more often. So we can tell that GAAP is important. Who sets GAAP? Well, the answer is a little bit different depending on whether the company is publicly traded or not. If it's a public company, it means the company has securities that are traded in the financial markets in our country. Those companies are governed by the Securities Act of 1934, which gave the accounting profession the right to make its own accounting rules. The Financial Accounting Standards Board is the current name of the group that makes these standards. Ever so often, the name of the group changes a little bit. We call this group FASB. FASB makes the rules that set GAAP. The Financial Accounting Standards Board decides what the generally accepted accounting principles are in the United States. For private companies, companies whose securities are not publicly traded, there's a choice of whether to follow U.S. GAAP, although most do.